Yo, Alexis, what's up? So look, I'm gonna show you something right now. I'm gonna go to the 1 minute on everything real quick, and I'm gonna do this as quick as possible, but make sure it's very informative. The information is, good information for you. So right now I'm making everything the exact same thing for you. So we'll be on the same page. Everything is on the 1 minute, okay? Cool. So these are all Nas 100 on the 1 minute time frame. As you see, we see all of these are candlesticks just zoomed all the way out, but we obviously see the moving averages that look a little bit different. This moving average is the slowest moving average pattern. This is slow, and this is slower. Okay, I'm doing it backwards. This is slow, all the way to the right is slow, slower in the middle, slowest all the way to the left, okay? Based on the moving average pattern that you see and stuff like that, okay? So if I was to make this one bigger, you see how we able to catch at certain times when you trade, at certain times when you trade based on like the correct time frames to trade and stuff like that, you can make money trading correctly, just like, you know what I mean? Like right here, the market opened 7:30 your time, right? So that would be 15:30 my time, but it's the same thing. Your time, my time is the same thing. So right about right here at 7:30 your time's when the market open. I like to get in the market a little bit like an hour before, so I can get a feel for what's going on with the market. So I say get in an hour before, about right here, 15:30. We see how these moving averages were closing in on each other. When the trend is ending, most of the time, when you see these moving averages, like you see how they was above each other, when they start closing in and they start like they're about to create a point, that means the moving average is about to cross up under the other moving average, and it's a new trend beginning. And when it crossed at the end, it start to spread away from each other. You would have entered that trade right there. If you would have kept that trade open, you would have won all that money. Okay, when trading the right time. Okay, so let's go to the other one, the second slower one. Remember the one we just looked at was the slowest. Now we're looking at the middle slow. Okay, let's look at this. All right, at the time, all right, 15:30, right? That's 7:30 your time. That's 8:30 my time. Same difference type shit, okay? My bad. So look about right here. Now you see how the difference is? You would have got in and traded a little bit quicker and stuff like that because it reacts quicker. So sometimes the quicker moving average is always going to react quicker than the slower moving average. But the slower moving averages tend to hold more of the trend more. You know what I mean? It's like it's less static and stuff, but it's this actual particular pattern and the other patterns are almost the same, just based on different parameters, but they are slightly different. But as you see, like right here, matter of fact, I'll put a line to show you when I'm talking about make it even better. So let me do this correctly. No, matter of fact, let me do this correctly. So I'm gonna just put a line right here, right? Then I'm gonna find 15. So about right there. I need to move that over right there. All right, about right there, 15:30, right? Now we see, remember at the end of the trend, they start to blend. You see what I'm saying? How that this quicker moving average right here is starting to start go underneath and starting to go towards the slower moving average. You know what I'm saying? It's always going to be one quicker than the other. And this particular black moving average is slower than this other moving average. You see how it's ending and they feel like to close in each other, make like about to make it like a sharp edge. It always cross up underneath that, right? But look, this at 15:30, right? Now if I go back here to the slowest and do that, remember same time. I'm trying to get it perfect. There you go. Now look, put them both together. If we look at the same thing, remember they both at the same time at the bottom. 15:30, 15:30. But look. You see how this moving average get you in the trade a little bit quicker. That's why moving averages are so key to trading, in my opinion, because moving averages, it follows the direction of the trend in price, period. So like I said, even though this is zoomed all the way out with these candlesticks, we really don't even need the candlesticks because moving averages are obviously following the price. You know what I mean? But right here at 1530 and 1530 here, you're able to get in the trade quicker right up in here than this one, as you see. So I'm saying? So this one is slightly quicker. You know what I mean? And let's see how it would have been if you would have did it here. Let me go here. Hold on. Hold on. Maybe I can move it over. Damn, I can't do it like that. Alright, hold on. Shit, hard. You gotta make sure you. Shit. There you go. Perfect. Alright, perfect. Alrighty then. So now look. You see the difference? But look. Now look. If you would have got in trading with this, you would have got in the trade right here quicker, right? Right here. Remember, everything's the same thing, same charts. We're looking at same candlesticks. But this moving average is quicker than these other moving averages. These moving averages are quicker. So you would have gotten it earlier, right? But look, you see how it went back up again right here. It made an arrow there, there, there. So you would have been losing more trades. You would have been taking more trades. And it's hard to say if you would have been really losing more money and stuff, but you definitely would have been taking more trades. But as I make it bigger, it doesn't just hold all the way through. Though at certain times you do get in profit. You know what I mean? It just don't hold all the way through. So it has its pros and cons and stuff like that. You know what I mean? It's all about really just trading at the right time. You know what I mean? Like I was saying, being a you know, being a disciplined loser when it comes to trading and stuff like that. Because sometimes when it comes to trading, we want to win all the time, but when it comes to losing, we can't handle the losses of the trades. We got to be able to handle the losses of the trades. You know what I mean? But imagine trading like this. You know what I mean? When the market would have opened. You know what I mean? But you see all that static and shit. All that, it look ugly, right? It just get mind-boggling shit. That's why I like using shit like this. It's the same thing. Look, you see the difference? Look, boom, boom. You see the major difference. But look, I'm finna show you something else that's dope as fuck. Now look, I'm finna move this over to right here where it crossed that. This kind of where the this kind of where the arrows at. It's hard to see the arrows because it's so far back, but as you zoom in, you'll be able to see the arrows, and also it's gonna come to your phone anyway. So I put something there, put the line there, put the line there, and this is just an example because I trade in the New York section. You just don't want to just trade to be trading. You know what I mean? But I'm just giving you an example. And this kind of based this about New York session as well too. But right here, cause yeah, this a little bit earlier. We got in a couple hours early, but for whatever you want to trade. But look, I'm finna show you something. I'm finna put another line here. And you're gonna see something dope. All these lines have crossed over, right? Remember, this moving average is crossing underneath this moving average price going down. The black under the greens down, black over green price going up, right? This is the 1 minute time frame, right? Remember, top down analysis, right? Top down analysis, you seeing what's going on overall. Now watch this. I'm on the 1 hour time frame, right? For the NAS 100. Look how close this is to basically doing the same thing. Right here. You see how it would have crossed like right here? Matter of fact, you see what I'm saying? Like right here, if you would have traded with these moving averages based on the one candlestick situation, how I'm trading, you would have got in here the same way. Here, same way. You see how they almost like crossing over close? Same way. Same way. Same way. So it's almost as if it's almost for real. You got the option to do this too. You may just want to trade on a 1 hour time frame. You know what I'm saying? But again, be a disciplined loser with certain trades. Just except like situations like this, you would have lost a couple of dollars. You know what I'm saying? Like right up in here, because it would have overlapped it and shit. But you would have won your money back. Then look, obviously right here, you would have won your money back. You know what I'm saying? But the point I'm making is moving averages. When you want to know about accuracy, moving averages are 100% accurate. You know what I'm saying? Moving averages are 100% accurate. Matter of fact, I'm finna show you something. I'm gonna show you something real dope. Alright, so close this. I'm always getting this shit wrong. Shit, what the fuck, man? Hold on. Nah, I want to delete this shit. Oh, I'm pressing everything wrong. Alright, cool. Alright, now watch this. I'm gonna make it a little bit bigger. I'm gonna just focus on this blue moving average and this orange moving average. You wanted to know the percentage, if the accuracy. So I'm gonna do this. Hope I'm doing this right. Nah, hold on. I'm gonna take a photo of this chart. Then I'm gonna put it on ChatGPT for you to look at and watch what it say about it. Motherfucking Justin, how you do this shit? Hold on. Alright, here we go. Alright, so I'm gonna grab it from there. Oh, sorry. There. God damn it. Hold on, I made a mistake. Let me do this again. Excuse me. I'm sorry, it's taking a little longer. This shit keep coming up. Alright, here we go. Alright, here we go. I got it. Alright, I just took a photo there, right? Now let's go to ChatGPT real quick. Now, they're gonna say it's not 100% right at first, but based on my algorithm, watch what happens. You may see some porn here. Fuck it. Nah, that ain't no. That right there ain't porn. That's me trying to create AI women. That's AI women. Some of them look animated. That's why I look kind of weird. So don't worry about it. All right. Where's the photo? There it goes, screenshot. All right, boom. Okay. Where's the one I just? I guess this is it. I hope this is it. No, that ain't it. Is it? Hold on. Nah, that ain't. What a screenshot I just took. What the- Come on, man. Oh, here we go. All right. Is the blue and orange 100% correct? Okay. interpreting 100% correct. If you're asking whether blue lines are correct and the function or calculation here how to assess it, yes, the lines look functionally correct. They follow the price closely, typical of the EMAs for EMAs and basically exponential and smooth. They react appropriately to the price changes. They tighten during consolidation, I'm sorry, and expand during strong trends. Crossovers between the blue and orange lines uh, appear to align in the short-term trend and shifts in the common use case of the exponential and the smooth moving averages. But they are not 100% guaranteed to be 100% correct for all purposes, because at times, and this is true, because it can consolidate. That's the whole point. Consolidation does happen, and that's the stuff we got to accept. So sometimes we think like, damn, my strategy don't work. The strategy work. We just got to accept, again, be a disciplined loser for trading. That's why a lot of people fail at trading. They have a strategy, and when they lose some trades, they try to go back to the drawing board as if they did something wrong. We cannot beat consolidation. We have to accept consolidation. You know what I mean? You have to accept consolidation. Conclusion: technically, the blue and orange moving averages appear to be working correctly as an indicator. However, they are not 100% correct in the terms predicting and confirming price moves. That's not true. Now watch this. I am speaking as far as reacting to raw price. What's the word people use? Price movement. Price data. We'll just say data to make it more technical. Watch, it's gonna say it's 100% correct. Based on the image, yes, the blue, the pin correct response to raw price data. Smooth, responsive behavior. You see what I'm saying? And I'm gonna let them know what it. You know what I'm saying? So yes, the blue and orange moving average appear to be accurate reflection of raw price. They're behaving exactly as the moving average should respond to candlesticks in the chart if you're using these to defeat them correctly. So look, I'm gonna let them know it's a 8 weighted and 10 weighted. So watch this. So basically, so it is 100%. It is as far as following price data, even with consolidation, it's still 100% correct. Yup, they are 100% correct in terms of reacting to raw price. In concluding, during consolidation, let's break it down clearly. In trending conditions, the WMA are tracking price tightly. You can see sloping up, down, almost immediately at the price shift. The 8M weighted leads to 10 weighted as expected. This confirms correct weighting and relative reactivity. In consolidation ranging, they flatten out and weave through the candlesticks. Crossovers happen frequently and stuff like that. They remain close to the price. This is exactly how MAs should behave in consolidation. Important clarification on 100% correct. You're specifically asking if the indicators are accurately following price, not whether to predict the future, and that's correct. So see, yes, they are 100% correct, mathematically accurate. See what I'm saying? That's what I've been trying to tell you. It's 100% accurate following whatever the price is doing overall. But you're never going to get a 100% profitable trade. But as long as you keep following the strategy, you're good to go.